Ladies and gentlemen, boys and girls, people of all ages, welcome to Debate Crypto. In a world where hopium collides with common sense, starring, as always, your hosts, myself, the Crypto Keeper, and the one and only Blockchain Crusader. How are you doing, Miguel?
Good, man. How you doing?
I am doing well, thank you very much. What is on the podium this evening?
Tonight we're going over the Evergrande situation over in China. We're going over Coinbase, right? Coinbase dropping the lending product, and at the same time, Coinbase signing a deal with Homeland Security for $1.36 million.
All right. Well, guys, I hate to, get things too sparked up here, but grab your matchbook. It's time to fire it up. Ooh, ooh. Okay. That was literally terrible. Guys, we always start off with like a bad dad joke. I hadn't thought one through this evening. We started to get on, and then I was like, oh, you know what? I got to think of something right this second. And yeah, that was not it. So, at any event, strike the matches. Let's fire it up. Let's get it on, Miguel. How about I'm going to go ahead and share my screen here, and let's take a look at this. So, the crypto markets suddenly lose $250 billion in value as Evergrande turmoil pummels Bitcoin, Ethereum, and other major cryptocurrencies. Miguel, I'll let you kick it off here and tell me what you're thinking.
I mean, you should take it over, dude. You just made a 70,000 view video on TikTok about this. So you are the pro at this topic right now. So
All right. Listen to you. You're hilarious. Okay, so here's basically what we're talking about, and this is ultimately all in a bunch of different articles, but crypto basically reacted, and in my estimation, overreacted to some turmoil over in China. So there's this massive company. It's the second largest real estate company in China, and they ultimately are going to default on a lot of money. It was something to the tune of like $300 billion, which, side note, if I ever get to the point where I'm able to even take a loan or loans of $300 billion, you would think things are going pretty good. But apparently you've still got to be able to pay them back, Miguel. So,
yeah.
I'll leave that alone. But yeah, so basically what's happened is it's kind of the same idea in a smaller scale as the Lehman Brothers back in 2008. There is basically widespread panic as a result of this company not being able to pay back these loans. And let's put it down. I'll give it to you as I did in that TikTok video recently. So on a very quote low level, there are people that have put their money down to buy housing, to lease housing. However they do that over in China, I know it's a little bit different, but they've put a bunch of money down, and it looks like they're not going to be able to pay that back. There are a lot of construction companies and other companies that are doing work with them that work on like a 30-day, 60-day, 90-day pay. They're not going to be able to get that money back. And then on the highest level, there's about 120 different institutions that are they're going to be looking at defaulting on the debt that they owe them. Now, if you've done any sort of investigation on the crypto markets, any sort of investigation on the stock market, you know that instability is not your friend if you are an investor in cryptocurrency or in the stock market. So this total instability rolls over from China through the Chinese investors getting into crypto. Obviously, crypto is worldwide. The American investors, as in my estimation, overreact, or possibly, and this is another thing we could get into, but they either overreact or use this. The hedge funds use this as a large scapegoat to be able
Yes.
to say, hey, you know what? I've got an opportunity right now to dump the markets so that we can then buy back in, because I think the majority of people still believe that we are in a bull run and still have a run to go. So let me just finish it off with this. As it relates to China, this goes really deep, okay? And China is big, obviously, in the investing space as it relates to crypto. It goes even further into things like Tether. There is actually a portion of Tether's backing that is in the Chinese bond market. So whenever you see these massive institutions or real estate companies or some just that has all of this pull and income for a region that invests in cryptocurrency, which now is worldwide, it has far-reaching implications. However, that doesn't mean that it has to. This very well could have been something that is happening in China. And these hedge fund managers are not stupid. And they say, wait a minute, there it is. I will bet you we can shake out some weak hands if we dump now, because we have something to point at. And as Miguel, we always talk about, if you've got something to point at, it makes it a lot easier.
Yeah, exactly. 100%. The fact that they can use this as a moment, right? The way that the institutions make the money, the fact that they can move markets is the volatility, right? They can use an event to dump the markets when everybody is panicking and freaking out and panic selling. They're scooping up and they're packing their bags again, getting ready for the next run that they would then find an event or a reason to pump the markets. And that's how they're making their money, right? On the swing trades. They're not long-term holders. They're not just going to buy and hold for the next 15 to 10 years, right? Michael Saylor might be taking that approach, but these institutions don't take that approach. They live on the day-to-day swing traders. So that's what they make their money. The fact that this event, right, this bank or what was it, the institution, real estate company that's defaulting on its loans, Evergrande defaulting, like you said, it is an over exaggeration of emotional FUD for the markets, because at the end of the day, this company is so big, it's too big to fail, right? What did we see in 2008 when real estate took a dump? What did they do? They bailed out the banks, right? Because they can't have an illiquid moment in the markets where people don't get paid and the money just stops. So that's a long, domino effect that happens, and it starts firing off. This person doesn't get paid, and that person can't get paid, and then nobody gets paid. And it's not just this one company that is affected. They affect a huge web of other companies around them. And obviously it's shaking up the entire markets, right? Stock market and crypto market around the entire world. So therefore, they're getting bailed out. And what's going to happen? So if the markets have been dumping because of this news, is the market's gonna pump when the news comes out that they got bailed out and they print in more money, right? I would think so. I would think that would be the boom, the catalyst event for more money printing, more inflation, yada yada yada, and then markets start moving, crypto starts pumping again, because crypto loves to pump on inflation, right? On money printing, and we're seeing that happening here in the United States. So
So I'll tell you what, Miguel, one of the things that I was looking at was I was in small group tonight, and I just happened to look down at my phone, and I've always got a gauge on where the market's at, right? As bad as that sounds, I do. And I looked down at my phone. I was actually pulling up a Bible verse, and I saw my portfolio, and I saw where things were at, and I was like, ooh, something must be happening, right? But the funny thing is, Miguel, we talk about technical analysis as it being something that is absolutely important as we look at the charts day to day, right? And it does tell a story of what's actually the mindset of people when they get in, when the charts look like this. And I thought it's really interesting, the numbers that we are bouncing off of. And last I checked before we got onto the stream, we were bouncing actually pretty solid back to the upside. I think it's pretty interesting, some of the numbers that we're bouncing at. And my thing is, if this was absolute just retail, dumping, just absolutely just panic selling all the way around, then the institutions did a really good job of catching us at a level that just happened to work out on the charts. So I will leave it at that.
Yeah, definitely. Retail's not that smart and doesn't have that much influence to be pushing the prices up and down at these perfect levels, right? Most people in retail don't even know how to do TA or read charts. So they're definitely not out there timing the perfect levels to start putting buy orders in, right? That's a very small number of people that are actually doing that. So that's definitely not retail at all. That is definitely institutional power.
Yeah, no doubt. I'm totally with you. Let me share my screen real quick on this next one, Miguel. So this next one is talking about U.S. Homeland Security. Okay. And I actually want you to get into this, Miguel. But let me just read briefly what's going on here. U.S. Homeland Security signs $1.36 million contract with Coinbase. It says Coinbase will provide the Immigrations and Custom Enforcement, which is ICE, as you'll hear people call it, with blockchain analytics software. The crypto exchange has also provided software to the U.S. Secret Service and Inland Revenue. The Immigration and Customs Enforcement branch of the U.S. Homeland Security has given a $1.36 million contract to crypto exchange giant Coinbase for, quote, business application and, quote, application development software, according to the Federal Procurement Data System. The new deal is Coinbase's largest federal contract yet. The deal was signed on Thursday and is worth around 40 times more than Coinbase's last contract with Homeland Security branch. Miguel, give me your thoughts.
So my thoughts on this is we are beginning to see crypto becoming corrupted in a way that people weren't foreseeing before, right? We're seeing Coinbase is going to sell users' data, right, and whatever other type of data that they're aggregating somehow through third-party companies that they own or whatever, and they're going to be selling your data to these institutions like ICE, right, to capture bad people, to capture illegals, right? It's going to be sold to you that way, and they'll be like, yeah, that's a good thing. Get these illegals out of here, right? But what they're not telling you is all the extra metadata that's being sold out there, and that just shows more spyware, more big brother status over not just the crypto markets but over people in general, and it always comes from the chosen one, right? This goes back to Coinbase being the chosen one. There's no way that any other exchange out there would be chosen over Coinbase to succeed in the future, right? Coinbase will succeed, just like Amazon has a bunch of government contracts, and their biggest business is not Amazon, it's AWS, making contracts with government to have them on their internet service. So Coinbase is positioning itself in the same exact way of doing government contracts and giving them data. And we're seeing blockchain data being corrupted in the crypto space in the way of more spyware, more tracking. So, this might be a little shaky in the long run for crypto positivity.
Yeah. So, Miguel, I think one of the things that I think is interesting is how a lot of the news and things happening at the high levels kind of all happen at the same time. We just got news the other day that President Biden was saying that he was going to be tracking accounts that have it was either $600 transactions or more, or $600 in the account or more. I can't be sure which one that was, but I know it had something to do with $600. And then now you have literally Coinbase signing a contract with ICE, with Immigration and Customs Enforcement. Now, we talk about this a lot. We love blockchain, right? We love the ability to advance our monetary system. We love it. However, the one thing that we have a hard time with is how far do we go with the privacy? As we talk about a lot, like our cell phones have taken away the ability to call to say, I can no longer say that I feel like I have privacy. I have a conversation at home with my wife in private about something. Let's say we're talking about shoes, and then the next thing I know, my Facebook is coming up, for example, and showing me these shoes that I was talking about.
Yeah.
Guys, we don't truly have privacy. So what I think is going on here is Coinbase is saying, look, we know that there are people that are moving money around either for illegal purposes or just for purposes that allows them to maybe try to skirt taxes. And so they're saying, well, if we can start on the front end by using something nefarious like immigrations and custom enforcement and say that it's drug dealers and they're doing all of these crazy things and we need to catch them, then what happens is the American citizens jump on board and they say, yes, 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 I am on board with that. We need to move forward with that. Let's go. Well, where does it stop? So we start with ICE and we end up what? Knocking on your door saying, excuse me, sir, you have not registered with the Department of Homeland Security as it relates to your Coinbase wallet. please sign here and make the necessary changes within 24 hours. And I just think it's scary, and I wonder where it's heading.
Yeah, it's exactly same thing that happened with the Patriot Act, right? Back in 2001 or whatever, after 9/11. After that unfortunate event happened, same thing happened. We're going to spy on everyone for the purpose of fighting terrorism, right? And we're going to try to find terrorists. And how did they do that? They were spying on everybody. And people were like, yeah, that's good. I have nothing to hide. So therefore, go look at everybody's phone calls, emails, phone calls, whatever it is, just to find the bad people. And the same thing is happening here with Coinbase, right? They're being sold the same thing. It's the war on a boogeyman that people fall behind. They're like, yeah, that's a good motive. So people surrender their rights to privacy for this convenience of a fight against a boogeyman that they never really see at all. And that's dangerous, very dangerous.
Yeah, no doubt, no doubt. And guys, we will take some questions at the end for those of you that are in the chat. So we appreciate you coming here. If you could just X out of the live chat, make sure to smash the likes. If you're not subscribed to us at Debate Crypto, no spaces on YouTube. That's for all of you TikTokians, as it were. We appreciate that you guys are here, and we hope that you will subscribe to us on YouTube. So let's move on to this last article here, Miguel. Coinbase drops lend product plans after SEC lawsuit threat. Let me say before we get started on this one for me, I have a problem with, because I think that it is absolutely dishonest. I feel like I don't trust this one. Okay. It says the program, which would provide 4% annual interest on USDC stablecoin holdings, will not be launched. Okay. In brief, Coinbase has canceled plans to launch Lend, a product that would provide 4% interest in USDC holdings. Earlier this month, Coinbase said that the SEC threatened to sue the firm if it launched the product. Cryptocurrency exchange Coinbase has canceled plans to launch Lend, right? It's a product designed to deliver, quote, high interest returns on USDC stablecoin holdings. Pause.
High.
Okay. High interest stablecoin holdings, right? So they already are planting seeds into your mind, okay? That high interest, right?
It's bad. It's dangerous.
Yeah, exactly. So it's high interest. It's like, oh my gosh, watch out. How are they getting these 4% returns, right? Guys, the legacy banking system is a sham. And what's happening is the cryptocurrency comes into the space and says, wait a minute, we can be our own bank. You guys have heard me talk about this before. We can be our own bank. And if we cut out the middleman, if we are our own bank, even with this, Coinbase is the middleman, right?
Yeah.
But even with this, Coinbase would make money and allow us to make 4%. So then it begs the question, why are our banks giving us 0.01 to 0.03% on a savings account? And here's the answer. The answer is they're freaking criminals, okay? And so at the end of the day, we could be getting 4% and more, or something similar to it, with a whole lot of our money in savings accounts. But no, that money is reserved for the banks to be able to take advantage of you. And so what is happening here is the SEC, first of all, is flexing, acting as if they're going to shut this down. Now, do I believe that in some sense of the word they want to shut it down? Yeah, I do. And I'll tell you, it's because of exactly what I was just talking about. They do not want the US dollar to be looked at as, maybe that's an alternative. I'll hold some cash. Because if people that can get their hands on USDC and see it as stable, right? Now they just say, you know what? Why am I going to hold? This is stable. It stays at $1, right? Why am I going to hold money in a regular savings account at this low, ridiculously, criminally low yield where I could be getting 4%? Now, last thing I want to say about that, 4% is just absolutely a drop in the bucket versus what some of the places like Celsius are doing. Celsius, last I checked, was doing something like 9 to 12% on some of these stable coins. So
Yes.
The money is there. This is part of the reason why I think long-term decentralized finance is the way that we want to head, but we're going to have such a hard time actually going there because it takes away people's thought process that, hey, I should be saving money in US dollars. Miguel, what do you think?
Yeah, I think basically what's been happening is the banking system and the legacy system, right? They know that the average American, the average person around the world doesn't have financial literacy. So they tell you, hey, your bank can't pay you 2% interest. They can only pay you 1%. Oh, that's normal. And they slowly dwindle it and dwindle it until they've dwindled it to what? To 0.31, right? 0.31 or something like that percent. So now we have come to accustom to think that that is normal and that there is real reason why they cannot pay us any higher than that. So now when you get that number thrown out, 4%, whoa, 4%? Wait, regular banks that, they're the economical geniuses. If they can't pay higher than that, there has to be something wrong, something sketchy, something illegal about this 4% that you're paying over here on Coinbase or on Celsius or BlockFi or whatever other, crypto platform. So they're programming us to think that this is some type of illegal thing, that they have to pay us low interest rate. That's one. Second of all, it's their way of coming at DeFi, right? If Coinbase itself will not fight for DeFi and for lending products, and they back down, they're pretty much setting the rule saying, hey, nobody else can do this. If we're not going to accept 4% from Coinbase without getting a lawsuit going on, we're coming for you, BlockFi, we're coming for you, Celsius, and we're coming for any other platform that is willing to pay these type of interest rates, because it does not comply to their agenda and their playbook of keeping interest rates low when it comes to paying out clients, so that they can keep playing with more of their clients' money in the banks. So it's just control, it's just power, and it's very what's the word, deceptive. It's only something that you can really notice if you have some type of financial literacy behind that. You can see, wait a minute, there is no reason why we shouldn't be able to get these interest rates. There is no reason why I can't invest my money here, right? But they don't want you to, like you said, they don't want you to use a stable coin, which is an equivalent to $1, and then drop the dollar. They want you to keep that dollar, put it into your bank account, and just keep holding on. Meanwhile, they're the ones making all the money.
Yeah, Miguel, I totally agree with you. So ultimately, they are setting the stage for no one else being able to do this. And I think the sad thing about this is, I think that that there's backroom handshake deals that are happening, and they're saying, okay, listen, we will not come after you for X, Y, and Z. We will do this if you will be on the front end, basically our little test dummy. And by doing that, Coinbase fulfills its duty as the golden child. Now, let's go even a little further with it. All right. This is debate crypto, right? So what if, right? I know it's not what if Wednesday, but what if the SEC says, look, we know that we're headed towards a digital dollar. We also don't have it fully launched. We want the digital dollar to be backed by USDC and a combination of something else. Or, you know what, we're going to use USDC as our digital dollar. Now, do I truly believe that? For just to give it as at face value, no, I don't think that. But I do think that they are in cahoots, that they are in bed together, and that they, at the end of the day, are working together to say, okay, you are the chosen one. You can fly and be free, but on the front end, you have to do a little bit of hard work. And that hard work, that grunt work on the front end, is putting out something that we are going to publicly deny. And when we publicly deny it, that is a message, a simple message to everyone else. We are not going to allow this to happen. And I'll be honest, Miguel, I the problem that I have with this is there's nothing wrong with what Coinbase is doing. There's nothing wrong with what Celsius is doing. There's nothing wrong with what BlockFi is doing. I'll tell you what's wrong. What's wrong is trying to handcuff people to rates on their own money that is literally, I say handcuff because I genuinely feel it's criminal. You
Yes.
literally are talking to people who, when you put your money into a savings account, and I always harp on this, they are loaning out this money and making returns of multiple percentage points. yet they're giving us hundredths of a percent. Guys, it is
Look,
freaking criminal. It is wrong, and I'm not about it. I'm not jumping on
people,
board.
yeah,
And I
people
want to
need
stay
to
decentralized as long as possible.
people need to understand Coinbase is not your friend. Any centralized entity like Coinbase is not your friend, right? People have gotten accustomed to Coinbase being the biggest user friendly application, and yada yada yada. They've built their audience. So people are like, oh yeah, I'll keep my money on Coinbase. If there's an exchange I'm going to keep my money on, it's on Coinbase because they're the chosen, right? What we've seen from the Homeland Security deal is that they're not going to have any real problems. The worst case, if they would have pushed on with the whole lending product, is they were going to slap in the wrist, maybe getting a little minor fine, and that's it. But they know that was going to be the end result, but they don't want that, right? They want to keep the mystery of like, hey, we're going to heavily come after you, therefore drawing the line for everybody else that you cannot do this. If we're not going to allow Coinbase, we're not going to allow any of you guys do it. And we're seeing that people need to move away from centralized exchanges. We need to stop getting accustomed, right? Crypto has always been about decentralization, but the last couple of years we've gotten accustomed to what's been happening with Coinbase and getting accustomed to how easy they are, how easygoing, how trustworthy they are. And people are falling back into the centralization trap that we've been trying to get away with from the beginning in crypto, right? We're even seeing Binance now coming in with the whole trying to be more regulatory friendly and saying, hey, we're going to have a headquarters and they're going to have a more centralized location so that they can be compliant with regulation. Are you there, Nick?
I really want to. Oh, sorry. What'd you say?
Oh, for a minute I thought you were frozen. I didn't know if you were there or not.
Oh, no.
So let me
We're
just finish up with the fact that Binance is doing this is showing that they're also not your friends, right? Anybody that is in the crypto space that is trying to become centralized for regulatory purposes is not because they're trying to make it safer for you. It's because they're trying to make more money for themselves, right? Crypto is about decentralization and regaining power to the people. Centralized entities like Coinbase and Binance moving towards more centralization for regulatory purposes is actually taking power away from us and back into the hands of the legacy system. So I definitely think there needs to be a stronger push in the next couple of years for decentralized exchanges and for people to be willing to go over there to these decentralized exchanges, pay the gas fees if you have to, and take the power away from centralized exchanges. Because once you do that and they start seeing that their profit margins start dropping, they will start bending the will to the customers and not to the regulatory obligations.
Yeah. So Rob asked, so which platform should we use then? And it's a great question. There are a lot of DEXs. There's a lot of decentralized exchanges.
Yeah.
Guys, for those of you that are new to the space, a decentralized exchange is just, to make it really simple, it's like, hey, take out the middleman, right? It is a platform that is utilized by all, and there's not that central point of failure, right? That's not that, Coinbase or Binance or whatever. It is an exchange that is software that is open source on the blockchain for anyone and everyone to use. And there's just not that middleman taking fees and this, that, and the other thing. Now, granted, there are some fees on it and things of that nature, but it is just not of a centralized nature like Coinbase.
But you got to balance it out, right? You got to centralization and corrupt power over your money versus paying gas fees. Yeah. You got to take it. You got to take one.
Yeah, and I think that here's what I think needs to happen. And Rob, hopefully this answers your question. I don't have a direct answer for you.
There's plenty. Uniswap, 1 inch.
Well, no, that's not what I'm getting at. There's a million different answers that absolutely work for this purpose. Oh, okay. What I'm talking about long term, right? Long term, what needs to happen is more and more people, as crypto gets more mainstream, more and more people need to put their foot down and say no. So it's not even oh, just Uniswap. It's not just 1inch. It's not these multiple different decentralized exchanges as much as it's people saying, no, enough is enough. I want to take control of my own money. I want to be my own bank. I'm going to hold a hardware wallet. I'm going to take care of my own money. I am going to take loans against my assets. We are starting to learn. I think it's crazy because something as simple as TikTok has started to genuinely educate people on some high level thinking as it relates to finance. And it's freaking scary for these banks. And they're saying, oh my gosh, the secrets are getting out. How do we can't put the cat back in the bag, right? It's been taken out. Now what do we do? Well, the only thing we can do, we scramble. And then we create FUD, fear, uncertainty, and doubt. And then, oh yeah, we will litigate with regulations. And they'll come in and they'll try to press as far as they can. But here's the reality, and I truly believe this. It's just like a lot of other things that are going on in our society. They will push as far as we let them. At some point, when we push back and truly push back and say, nope, not happening, I am not getting on board with that. At that point, hey, that's where it's going to be that's where it's going to make a change. And I think that's where it's going to have to go as far as decentralized finance for it to work long term. That's just my thoughts.
Yeah, I agree, but people can't wait for that moment to say no. People need to show, need to have action, right? It's not just about
That's
the
a good
words
point.
of. It's not just about the words of saying no, I won't allow that, or I'm going to wait to some moment of some type of regulation to then be like, no, okay, now that's too far. No, you got to show them before the regulation happens. You got to show them with your action of taking your money off these centralized exchanges, so that the centralized exchanges realize what's happening. They're going to use their lobbyists to go over there and be like, hey, we can't pass this type of regulation because we're already seeing this type of data, right? We're losing customers. We're having less volume on here. We're seeing them move over to decentralized exchanges, and we need to incentivize them to come back. So we cannot allow this regulation to happen. And that's when things will change. Once we have actions, right? We not wait to the last moment when the regulation is passing or about to pass to then have an uproar the last 2 weeks, right? Like when they were trying to pass a bill a couple of weeks ago, or about like maybe 2 months ago now, that they were trying to pass a bill and everybody was on an uproar about it. Don't wait to that moment. Do it now. Learn how to use decentralized exchanges. Learn how to move your money around off of these centralized exchanges. Don't wait to the last minute.
Crypto fam, part of that, Miguel, I couldn't have said it better myself. Part of what Miguel and I are doing as a part of Debate Crypto Academy, right? We've talked about this rolling out, and a big part of what we're going to be doing is educate, right? Here's what it is. Educate, 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 game plan. Educate some more, educate some more, educate some more, game plan. And if you're prepared to educate yourself, or at least let someone like Miguel and I, who have been in these markets for years, educate you, then good on you. Now, what do we have to do next? We have to set up a game plan. And what so many people do, where they miss and they veer off and they go wrong, is maybe they're willing to spend some time to try to educate themselves. Maybe they're even willing to buy a book, right? They're willing to buy, you see the Bitcoin Standard over my shoulder here. Maybe they're willing to maybe they even read the first 36 pages, right? But the point that what happens is then after that, it's like, man, I'll just see what happens. And I'll tell you what happens. Things get wild, and you either FOMO in, right? Because you're so scared of missing out that you just start buying in at ridiculous levels, right? Or you panic sell on the way out. And there's a lot more options than that, right? People will panic buy. What I can say is that trading and investing can be very emotional. And so what part of Debate Crypto Academy is going to be is first of all, taking some of the actual, taking some of the learning process off of your shoulders, because we've done a lot of it, right? We've been doing this for years, educating ourselves, and we want to pour that education into you. Okay. The second part is that game plan. Not only is it actually setting up and saying, okay, things look like this. This is what we need to look for moving forward. Here are some options. Here are some things that we can do. But on top of that, we are going to teach you how to make money through a bear market. We're not financial advisors. We're not giving financial advice. but we can get together as a group, as a people, get on to some of these, these games that are play to earn, right? But look over actual different ways to earn passive income. We have so many fun ideas that we can get together. And the reason Miguel and I are teamed up is because two brains are better than one. Miguel does things better than I do, and I do things better than Miguel does. And together we can create a community. And that community starts with two, and it needs to add you, at the lack of sounding super cheesy there. We started with two, and now we want to add you.
Yeah,
But yeah,
100%, dude. I mean,
yeah,
I think the thing people need to realize is the bear market is not a time to just hit snooze on the alarm clock and go away for a couple of years and come back. The bear market is when you need to double down on what you're doing. The time to educate yourself even more than in a bear market. Figure out different strategies to continue making money during the bear market. Getting ready to pack your bags with certain projects and accumulate certain projects to then be able to build your strategy, build your portfolio, so that when the bull market comes, that's when you take it easy. That's when you ride it out and just have good long sleep. And that's when you actually hit the snooze button and say, "Let me know when the bull market is over. Then I'll sell."
yep,
That's the time.
yep,
There's a time to grind and put in to build your portfolio and build your strategies for the next bull market. It's not wait till the bull market, then I'm going to grind at the last minute, FOMO in, do all these crazy things because people are talking about it online, and then lose a bunch of money, and you're panicking the whole time, and everything's very
yep,
emotional.
yep.
It's the opposite.
We are going to game plan on top of educate through this next bear market, guys. Don't go anywhere. Don't leave, because as we always say, a bull market will make you rich. A bear market will create generational wealth. So, guys, that's all we've
Exactly.
got for today. We thank you so much, Crypto Fam. If nobody's told you before today, we freaking love you. And like Rob said here, no, we need to become a big family at the Debate Crypto Academy and have each other's back. We do need to have each other's back. And speaking of having each other's back, until next time, hodl
Huddle like
like
it's
it's
hot.
hot. We'll see you guys. Have a good night.